Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 24th of June, and it's still 2021. What are we looking at right here? It is the intraday chart of the Russell. What can that also be? The IWM. What's up with this? The chart. This is the trend of an intraday Russell or IWM. Why are we looking at this? Because that is a pretty consistent creeper uptrend, and that's what the market's doing in general, but it's seen here on the lower frame, which is just essentially a creep from 2270 all the way to 2333. And that looks similar, that's the Russell, to the financial sector. That as well is doing a creep uptrend. Now, uptrends are a series of higher highs, higher lows, but you can also look at linear regression, moving averages, all the things in between. Let's just talk about the chart moving from the bottom left all the way to the top right. That is intraday. And that's the main picture for the strongest sector of today, and that played squarely into the gains of both the Russell, and again, just for us that trade the IWM or some other options, that's the ETF, but also played into the Dow mini futures. And it wasn't quite as linear, and that's because the Dow is only 30 stocks, but nevertheless, the strength and the persistence and resilience was in the financials, which played into the Russell. On the S&P, it's still up, but today, for the intraday traders, was more range. And that is, strangely enough, an all-time high. It still doesn't feel like it, but we'll come back to that in a little bit later in the video. And other than that, the technology sector, in large part, because of some interesting movement in Tesla, right? The XLK and Tesla look a little bit similar. And that's what played the NASDAQ, which actually did make an all-time high. That being said, let's sneak our perspective up to the daily chart. That same intraday chart, we had the left side, right side, uptrend. Call this kind of, it's still creep, ooze, stable, low volatility, frustrating, not fun, whatever word you want to use for it. You can pick some words if you would like to use them, but nevertheless, the market did make a new all-time high. And we can take a look at the SPX, because what my thought process is, again, I'm a short-term trader. I do swing trades, but also most of what I do is on an intraday basis. And this is continued creep. Is there precedent for what we are seeing? Yes, every single time. In fact, let's go back a little bit further. This is the SPX. Actually take us back to a monthly chart, which is, let's not even look at that. But each time the market crested above the 3,500 level, that will go to a weekly chart. So above here, this is a daily chart. That's new all-time highs. So in the video, one of the things I frequently do is present stocks that are making new 52-week highs. And the reason for that is to continue the uptrend. And that just means for short-term traders to buy pullbacks. We talk about flags and retracement, but that could be bull call spreads. It could be any type of bullish strategy, not at the all-time high, but on the pullback. And the S&P continues that. So with respect to new 52-week highs, there is just a tendency from probability, or what we call trend structure, for a market that is trending to continue. To do so indefinitely? No. To do so forever, of course, same concept, no. But in terms of probability, until we see clean breaks, and the market does like to trick us into thinking that's the top, and that's just on deep pullbacks. My suggestion and how I build out the trades is to take it one swing at a time, 1 week at a time, and then adjust. That way you don't get too far into the future and you don't get too caught up in prediction. And of course that can work both ways. We're not going to predict this to continue up forever, because there are risk pockets on the way down, but we're not going to predict the top of the market. There's risk pockets for that. And every single time that the market makes a new 52-week high, it is not the top of the market. One of them will be, absolutely, but it is not really paid to build future type of projections. Just take it one step at a time. Now that's the S&P. That's the broader index. This is the NASDAQ, which is the tech sector. And that is, again, a new. It really doesn't feel that way, but similarly, those string of highs are all-time highs. This string of highs were all-time highs. And that little short swing right there. Now, again, one step, one day at a time, the play would be to be bearish at the highs, or to at least play some put spreads, but be patient and wait to pick up some calls or pick up additional trades in the future from the long side. Now, again, we take it day to time, and each of these videos is directed at short-term tactics, ultimately what's working in the market right now. Outside the broader market, crude, which is CL, continues the uptrend, and that's the same logic. Again, starting here, ending here, lower left, upper right. That is about as basic as a definition as we can make it, but we talk about quantifying the highs and the lows and the highs and the lows, and that just builds out trends. Again, one can think about the situation now and how the future could play out short term. Given that we are overextended, the market can easily keep trading and trending higher, but the better plays could be to the short side. That is for scalps only. That is not to call tops in the market. That's a little too complicated. It's very difficult to do that. But go with the flow of the market until something changes, and if something changes, it would be a deep pullback, deep move to the downside. And again, see how the market tricks us all. When that looks like it's done, looks like the top, looks like it's going to start trading down, but then the market resumes the uptrend. So that's the short-term plays. Again, the risk for the bulls and the short-term trades are for those snap pullbacks, and you'll lose money or take losses on those violent downswings. And if you are a put player or a bear or a fade trader, perfectly fine, but your risk is for the continued creep ahead of that 1, 2, or 3 days when the market crashes. And if you call that a crash, that's crash-tastic. It's just a deep pullback. That's really all it is. For the put side, you will be playing for the risk reward for a sudden deep pullback, and that will build your account. But it will require patience, and a lot of patience, to hold the positions and be confident that the pullback will occur. So either way you trade, and whatever strategy that you're looking at, we're not predicting, we're just looking at the short-term moves, that if you are playing to the fade technique, that does require patience and sudden profits. And if you're playing to the long side, you're going to do so on pullbacks after that retracement takes place, or the rubber band snapback, and your reward is that the market just keeps on creeping. And of course, your risk is that the market pulls the rug and falls down. There is no way to predict what is going to happen, but those are the options. Those are the ways to conceptualize the price. Outside of the equity market, or at least outside the futures market, to look at the video, we'll look at the stocks making new 52-week highs. There are 36 in the S&P 500, and I do this by market cap. And all it is comparing where the strength is, and it's still in the tech sector. To chart some of these, we can continue to see Microsoft, again, pullbacks tend to be favored. When the market is overextended, that does favor the put side. And you can structure trades and be patient with those as the pullback begins to materialize. But nevertheless, the trend and the ease of movement is still higher. Facebook is joining with another high. Again, the risk for the bears is continued creep ahead of a deep pullback, and the reward for the bears, reward for the bulls and buyers, is continued creep. We all manage these trades a little bit differently. And Visa, there of course is NVIDIA, which is a split coming up. Nevertheless, it is strong. Adobe makes another 52-week high, and then Eli Lilly caught a big bid, caught a big gap in movement in today's session. Other stocks would include Costco, which I would say snuck its way to a new all-time, double check that. That is an all-time, barely, right? Costco, barely, but it is an all-time high. And the others would include American Express. Target, we'll sneak Target in there because it just popped to a new high as well. We don't know the future. We're just playing the risk-reward. and the structure and the pullback, snapbacks, trending to the upside, and the risk reward, doing so and managing that with the option market. And that way we can be a little closer. We don't have to predict. We just have to put the positions, understand the risk, understand our style, and monitor those as they continue. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for June 24th, 2021.